Good morning, everybody. Happy Monday. Microphone on here. It's February 23rd, 2026. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Come at you every Monday and Thursday morning, roughly around 8:30, 8:45. Talk a little bit about the markets and about trading, what happened last week, what's going to happen today and the next couple of days. So here we are, Monday the 23rd. This is the last trading week of February. So we'll have 5 more trading days in February. Next Monday, we will be kicking off the first trading day of March. That'll be March 2nd. But first things first, we've got to take care of business here in February. And so far, it's been a fairly decent month, a little bit mixed, but with the strong performance by the SP 500 that's been leading the way, Russell 2000 holding on to those strong gains from January, also doing well. But the one thing that we've noticed, certainly over the past few weeks, is high levels of volatility. And the volatility here doesn't necessarily equate to what we see in the volatility index, the VIX, which is somewhat elevated right now, but not nearly as high as you would think, ticking up about 20.3 right now. The futures are right about the same as where they are, 20.35. And we see a tick up in gold above $5,100 again. Silver up strong, up about 3.5, almost 5%. Crude oil still holding a nice bid here. I did mention on some media calls and also in our chat room, I thought that we get a couple of closes above 65, and that happened last week. We're going to be making a run towards the low 70s. Oil futures have kind of predicted that number going to be happening in over the next month or so, month and a half. So keep an eye on that. If you have some oil names, that's great. If not, you might want to take a look at some of these names. Some of the ones that I'm in are ConocoPhillips, COP, PSX, ExxonMobil. I do have a little bit of Chevron, also Valero, VLO, along with Schlumberger, SLB, and there's a couple of other names out there, Oxy as well too. So take a look at some of those names. Oxy came out with some good earnings last week. What can we look forward to this week? Well, we have a big slate of earnings coming out, and of course, everyone knows the big dog is going to be coming out on Wednesday night. And what is that one? That is NVIDIA. NVDA is the symbol. Salesforce will also be coming out as well too. That's also another Dow industrial name, along with Home Depot on Tuesday morning tomorrow. Stock had been strong, but it pulled back a little bit over the past couple of weeks. We'll also hear from Kava on Tuesday night, along with Axon, Workday, Hewlett Packard. Tomorrow, later on tonight, we'll have Hims and Hers, which has kind of been a controversial name. Kratos, which is a defense company. And then later in the week, Synopsys, Vici, Nutanix, Celsius Holdings. And everyone's favorite name to love or hate is CoreWeave. CRWV is going to be delivering earnings Thursday night after the close, along with SoundHound, Zscaler, Duolingo, Dell, and Marathon. So not an enormous slate of names, but some important names as well too that could drive the action in the markets later on in the weekend into March. So let's take a look at a couple of other things for you. I wanted to show you let's talk a little bit about fixed income here. First of all, let's take a look at this 10-year yield. What's going on? Well, beginning of February, we almost matched the January high at about 4.27. Now, of course, at 4.3. Looking at this chart right here, this is the yield. This isn't the bond price. This is the yield, right? And when it goes down, when the yield goes down, prices go up, right? So obviously what's been happening since the beginning of February, when we hit 4.3, we've gone down in yield of 4.05, nearly broke 4% on the 10-year yield. So when the yields have gone down, the prices of bonds have gone up, right? So we've seen some demand for fixed income here across the curve. And then what does that mean? That means that people are buying bonds on the 10-year, not just the 10-year, we're seeing it on the 20 and the 30-year. We've seen interest rates falling on the long end of the curve. You can take a look at the 30-year bond. Has fallen just as much as the 10-year yield from 4.9 all the way down to 4.7. We're at lows on mortgages that we haven't seen since last fall. But on the short end of the curve, that's the one that's a little bit more stubborn here, right? Let's take a look at the Fed funds futures market. Fed funds futures, which is your overnight rate, saying that 4% chance of a rate cut at the next meeting, which is on March 17th, 18th. April, seeing about a 16% chance of a rate cut at the April meeting. So basically, these next two meetings, a rate cut is off the table. We did hear some words from Governor Chris Waller this morning saying that he thought that January could have just been an anomaly with the jobs number. We'll have to see what happens in February, because if jobs continue to be decreased, job creation that is, it could open the door for a rate cut sooner rather than later. Of course, the economic data has been strong. Inflation is still quite a bit sticky and basically going flat. And if it turns right back up again, that's going to be another worry for Fed officials, right? June, let's take a look at that. Much better odds of a rate cut. Lower than it was about a couple of weeks ago. Excuse me. And you can see clearly that it's about a 50-50 chance of a rate cut happening. 49% favoring no cut, 51% favoring a cut, more likely one cut here. And if we go to December of 2026, we see the odds are that we're going to just have maybe two cuts in 2026. That's what the Fed's recent projections had said in December. Now, of course, this next Fed meeting in March, we're going to have projections again, and we'll see where if they kind of fine tune their numbers for growth, for unemployment, for inflation, and for Fed funds rate. So that'll be an interesting meeting, and also, second to last meeting for Chair Powell. He'll have one more meeting after that in April, and then he'll be leaving the committee. So this morning we have Fed funds future, or I'm sorry, equity futures, U.S. equity futures, down about 23 handles. We're off the worst levels of the overnight session, which we were down about 55 or 60 handles. We've been pretty volatile overnight and also over the past couple of weeks. NASDAQ futures down 130, and the Dow futures down about 200. We did have earnings this morning from Axsom, AXSOM, Domino's Pizza, Fresh Pet this morning, and kind of mixed with all of those. Listen, I think that's going to be it. I think it's good to have some puts on, and we obviously got nailed on those puts on Friday with the market rallying after that decision from the Supreme Court on tariffs. But it's always good to have some puts on just in case volatility starts to pick up. And we've seen that picking up over the past several weeks. So I urge you to take some profits on stuff when you have it, raise your cash levels. There's just not a lot of rhythm right now in this market. And what we're seeing is that the market has been trading in a range from about 6,800 on the S&P 500 to about 7,000 to the upside. We're kind of right smack in the middle there right now, right? 69.09 is where we close. We open up this morning, we'll open up around 68.75 or 68.80. So we're kind of like right smack in the middle there. And with volatility elevated somewhat right now, it's not hugely elevated, but still at 20%. It means that there's going to be a wide range in the markets. It's going to give a lot of people a lot of indigestion here. I'm going to give you some stomach aches while we're moving up and moving down without any particular rhythm. Also, we've noticed that price movements have been quite erratic, and which tells us that liquidity has been poor in the stock market and in the futures market as well. So that also creates a lot of volatility here and a lot of worry and angst. And don't forget, after next month, we have people are going to have to sell stocks to pay taxes, right? Some people probably had a good year last year. I know there's going to be a lot of tax refunds coming out for people over the next month and a half, and that's going to drive some economic activity. However, there's going to be a lot of people out there, wealthy people, who have to pay taxes, and there's going to be people just across the spectrum having to sell stocks and raise funds so they can pay their taxes. So that's going to be another issue to deal with, probably a short-term issue, but still something to consider and something to worry about. So keep an eye on NVIDIA this week. We'll be back on Thursday morning to talk a little bit about the earnings and about what the reaction and response is to those earnings. And I'll see you guys all on Thursday. So have a great day. Trade well today. If you're in the chat room, I'll see you a little bit later. Oh, and by the way, don't forget, Wednesday afternoon after the close, we're going to be having a webinar. I'm going to be joined by my good friend Todd Gordon from Inside Edge Capital. He's going to be talking a little bit about support and resistance and how he views things from a technical point of view using Elliott Wave and Fibonacci's. He's excellent at this. He's an expert at this process, and I urge you guys all to use the link. It's free to attend, so you'll be able to come in and watch and ask questions as well for Todd and myself. So I look forward to seeing you guys all there on Wednesday afternoon. That's the 25th. Have a great trading day. I'll see you guys all Thursday morning. Take care, trade well, and I'll see you all then.